Now we will proceed to additional illustrations. For the inventory cost flow, so we have these items here given. We have the beginning balance, purchase, sales, sales return, purchase, purchase return, and then we have ending balance. So required is inventory cost at the end of the year, and we have the cost of goods sold. So first is for the FIFO periodic. So actually that also includes the FIFO perpetual for requirement 2. So we have for the FIFO periodic or perpetual, the inventory cost would be coming from, or the inventory end would be coming from the latest nga purchases. So in here, we have for the latest purchases, so coming from 30, kani sa 30. And why is it nga dili man siya 16, ma'am? Why is it 14, not 16? Because on January 31, there are 2,000 units that were returned. So therefore, the remaining purchases would only be 14,000 for January 30. That's why 14,000 times 150, that's 2,100,000. And how do we get the 18,000 by the way? So just trace the units of items from the beginning balance plus the purchases minus the sales plus sales return. So ibalik na to ang kung sales return na siya, ibalik na to ang inventory kay wala man na dayon ang sales. Then you have purchase, then deduct the purchase return, that's 18,000. Since we already have taken note of the 14,000 units, so the items left na lang, 18 minus 14, that would be 4,000 units. And asa magikaning 4,000 units, 4,000 units. So that would be on the next nga sale. So 30 man ang pinaka-latest nga sale. The next is from 10. So that would be 4,000 units. 4,000 units times 250,000. Okay? So that would be 1 million pesos. So total inventory cost is 3,100,000. Now we will proceed to the cost of goods sold. So to determine the cost of goods sold, so we're going to take note of the items here. So that's 1 million plus 1,250,000 plus 2,400,000 and deduct 300,000. So you will get here 4,350,000 and just copy inventory and 3,100,000. Your cost of goods sold would be 1,250,000. Again, this applies to both FIFO periodic and FIFO perpetual. Next, we have the weighted average periodic. So for the weighted average periodic, we need to determine the unit cost. So to determine the unit cost, we need to compute compute first for the goods available for sale, and we computed it earlier. That's 4,350,000 and divide it by the number of goods available for sale in units. So that is 24,000. So 4,350,000 350 divided by 24, that would be 181 pesos and 25 centavos. So the unit cost is 181.25. We multiply it by the inventory end nga 18,000. You will get 3,262,500. After we have obtained our inventory end, we will deduct it from the goods available for sale to get the cost of goods sold, which is 1,087,500. So that's for weighted average periodic. Next is for the weighted average perpetual. Okay, so for the perpetual, so we need to trace the transactions from the beginning balance here. We have 5,200 pesos, that's 1 million. Add the purchases 5,000 at 250. So that's 1,250,000. The total is 2,250,000. Then divide it by 10,000 units to get the unit cost of 225. Again, if there are purchases, we're going to determine the new unit cost. And that new unit cost will be the basis for the next nga sale to get the cost of sales. Next, on January 15, there's a sale of 7,000. So 7,000 times, copy the 225. So that's 1,575,000. Get the difference, that would be 675,000. And then the units would be, remaining balance is 3,000, and just copy 225. Next, there's a sales return of 1,000. So we will use here the pinaka latest ani nga unit cost, which is 225. Because ang unit cost man sad sa nabaligya previously, kaning 7,000 is 225 man. So, anin na siya attributed. So, that would be 1,000 times 225. That's 225,000. Since this is a sales return, so our customer returned to us the inventory. So, therefore, ang inventory ma-add back sa atoa. That's why gi-add na to ang units. So, our balance now at the end of January 16, ang date is at 4,225. Sakto ba? 4,000. Ay, sorry. Dili ni siya 225. This is 675. This is 900,000. Okay, correction. This is 900,000. 675 plus 225. This is 900,000. And then 900,000 plus 2,400,000, and that would be 3,300,000. So correction for this one, this is 900,000. Now we have a new purchase, that's 16,000 units at 150. So that is 2,400,000. Again, this is 900,000 plus 2,400,000. That's 3,300,000. And we will get the new unit cost since there is a purchase. So 3,300,000 divided by 20. So that's 165. So 3,300,000 divided by 20,000, 165. The next date is there's a purchase return. So 2,000 times 150. Ngano 150 ang gigamit man, ma'am? Ngano dili man 165? Because this purchase return is coming from ani nga purchase, tong 150. So 150 ang gamiton, dili ang 165. So iuli man nato siya sa supplier nato nya, pila may palit nato adto, 150 man. So 2,000 times 150, that's 300,000. So 3,300,000 minus 300,000, that's 3 million, divided by 18,000 units, that's 167. Again, you're going to recompute and recompute the unit cost every time there's a purchase, kani sila purchase, and every time there's a purchase return. So therefore, how much is our cost of goods sold? So 4,350,000 minus 3 million, you will get 1,350,000. Another example, we have Furlough Company began operations at the beginning of current year with 10,000 units of merchandise with unit cost of 80. Purchases for the current year are as follows. So physical inventory revealed that there are 15,000 units on hand. And then compute the inventory cost at year end and the cost of goods sold using first Fifo periodic. Okay, so we have for Fifo periodic, you have here, okay, so you have lot 4, sorry. So at the beginning of the year, there are 10,000 units worth of merchandise with unit cost of 80. So naa sila beginning nga balance. Then purchases, Here are the purchases and the remaining items is 15,000. So, pwede na natong i-trace back ang mga items. So, 15,000 gikan yun na siya sa, ano sa man siya, pinaka latest you have 5 lot 5 with 14,500 units and the unit cost is 90. So that's 14,500 times 90, that's 1,305,000. 1,305,000. And the remaining units, 15,000 man, so minus 14,500. So na ay 500 remaining units that will be coming from lot 4. So that's 500 times the unit cost is 100. So that's 50,000 pesos. So the total inventory or inventory cost is 1,355,000. And then the cost of goods sold is 3,500,000. So we need to get the goods available for sale, which is the sum of the beginning plus all the purchases for the year. For FIFO weighted average, so mali siya ang computation sa pagkuha sa 4,855,000. So again, that's the sum of the beginning plus all the purchases. So the goods available for sale here is 4,855,000 and then divided by the number of units nga 50. So that would be 97 pesos and 10 centavos. So 97.1 times 15,000 units, that's 1,456,500. And we will deduct this amount from the goods available for sale to get the cost of goods sold, which is 3,398,500. Then, for specific identification, assuming that the inventory comes from lot 3, okay, ma-identify nimo asa gikan ang nabilin. So, lot 3 with 6,000 units and lot 4 with 9,000 units. So, therefore, you just simply get the unit cost for lot 3, 120, and then lot 4, 100. So, the total is 1,620,000. Therefore, our cost of goods sold, when we deduct it from the goods available for sale, so that would be 3,235,000. Then this is the illustration for the relative sales price method. So you have Landmark Company purchased a tract of unimproved land for 26,850,000. The land was improved and subdivided into residential lots at a cost of 43,500,000. These lots were all of the same size, but owing to differences in location, were offered for sale at different prices as follows. So these are the sales price per lot. And these are the unsold lots at the end of the year. So compute the cost of unsold lots or the inventory end at the end of the year. So first is we need to get the total cost. So that's the purchase price of the lots, 26,850,000 plus the additional costs for improving and subdividing the land so that it can be sold. So you have 70,350,000 for the total cost of the land. Now we will need to get the relative nga sales price by using the sales price for each of the group of lots. For group 1, the sales price is 3 million and you multiply it by the number of lots, so that's 60 million. 2,500,000 times 10 lots, so that's 25 million. And then we have 2 million times 10 lots, so that's 20 million. So the total sales price for all the lots would be 105 million. And the next thing we're going to do is to get the fraction to apportion our total cost nga 70 million 350. Correction, this is 70 million 350. So you have 60 over 105. We will get the same amount of zeros. So that's 60, 25, 20 over 105. So that's 40 million 200, and then 16 million 750, then 13 million 400. And again, correction, this is 70 million 350. So how much is the cost of the unsold lots? So we will get the unit cost per lot. Unit cost per lot. So to determine the unit cost per lot, that's 40 million 200,000 divided by 20 lots. So pila ka buok ang lots diri. So kuha mo ang per lot, that's 2 million 10. Then 16 million 750 divided by 10 lots. So that would be 1,675,000. Then 13,400,000 divided by 10 lots. That's 1,340,000. And we multiply it by the unsold number of lots. So 2,010,000 times 5. That's 10,050,000. Then 1,675,000 times 4. That's 6,700,000. And we have 1,340,000 times 3. That's 4,020,000. So the total value or the total cost of the unsold lots would be 20,770,000. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.